Okay, welcome everyone. We'll start our lesson 4. Today lesson will go through LO4, learning outcome 4, understand current external auditing practices and practice which we'll go through. My name is Anjum Satar and my email address. Please copy in as well. Learnerwork at ukversity.co.uk. If I miss, due to any reason, so please just drop copy into learner work as well. So we'll start this lesson. Before starting this lesson, first of all we recap what we have learned during our last 3 lessons. So in lesson 1 we discuss about understand internal audit. We discuss about role of internal audit in our organization, why is audit important. We discuss about ethical issues as well. We discuss advantages and disadvantages of internal and external audit. And then we discuss about learning in lesson 2. We discuss about understand the current external auditing legal and professional requirements. In lesson 3 we discuss about different types of risk. We discuss inherent risk, detection risk, and control risk in audit risk. And we discuss about sampling and non-sampling risk. So today lesson will go through LO4, understand current external audit practices. So which will go through current audit, the practices within an external audit. So that's all will be focused today lesson, guys. If you're listening this recording, if you have any questions, so please feel free to drop me email on my email address. So just think about current your knowledge about audit legislation, so you can rate. Always is a good practice when you start any activities, anything, always look around, reflect, what your current knowledge at the moment. At the end, reflect, did you found anything new? Have you learned something different? Have you found something which is quite useful? Has your knowledge is increased? These sort of the question you ask yourself, and that will help you to carry on learning. So today lesson inductive contains audit processes, techniques, which we can use. Audit planning is very important. Plan is where we are, where we want to go, because plan is what you want to be achieved. End of the day you have a plan, but there is a no control. So in audit, planning and controlling is quite crucial as well. Sampling and testing, computer assisting audit techniques, the software also help. We'll go through some generic and some discussion will relate different types of audit, which we can for external purposes. The legal requirement, we'll discuss about various legal requirements. So we have two assessment criteria and the learning outcome 4. First is explain audit processes and techniques. So first, IES 500 International Standard of Auditing 500, audit evidence is crucial. Identify the 8 types of evidence gathering procedures that auditors can adopt to obtain the audit evidence. Inspection of documents and record may give the evidence of ownership, rights and obligation. Title deeds may give the evidence that the control operating, invoices stamped, paid, authorized payment by the appropriate signatures. May be evidence about the cutoff, the dates and the invoices, the dispatch note. Confirm the sales value, the purchase cost, if we're doing audit. So we need to be look around the inspection of document and record. When you do, second, inspection of tangible asset. Tangible is mean anything which have a physical substance. You hold it, you check it, that's called tangible. So will you usually give the pretty conclusive evidence of the existence. If the asset really exists in the organization, I would put the fake, you maybe remember the company of Enron, creative accounting. Lot of people use the creative accounting, which is illegal. So we not really, because you understate, our state the figures, any information which we give to our shareholders, our stakeholders, all need to be true and fair. So auditor's job to be find the whatever the things you have and give their reasonable opinion about, that's based on evidence what they. So obvious, here is impairment. If we are doing, the non-current asset and any asset under the standard of accounting, so we can use the observation method to do, the audit properly. Observation involve the looking at the process and procedure, maybe well provide evidence that the control is being operate in the organization. Think about, and observe staffing and check signatory. You remember that there is evidence that the control was operating properly at the time of observation. A detailed presence may be had an influence on the client staff behavior. Maybe they not deal the way they're dealing in front of the auditor. Observation in a one-off event, inventory count maybe give the good evidence, the procedures are carried out. Inquiry. So auditors can do the inquiries. By law is required as well, collect the evidence. Because your opinion will be based on evidence, auditor's opinion, giving, the appropriate opinion. So will be usually need to be corroborated in some ways through the other audit procedures. Low quality due to their inherent bias. So we need to be make sure the information not biased. We need to be make sure this is an analytical procedures well, adopt in the organization. Management representation as a part of overall inquiry. So management involvement within it. So the involvement obtaining the written responses from the management confirm the oral inquiries. So a detail is inquiring. These are the considered further, which we'll go through in our further slides as well. Not really here in the chapter, but on the further slides we can discuss this. Okay, confirmation. What is the confirmation? This refers to the editor obtain the direct response, usually written from the external third party in external audit. So example include the circularization of the receivable. To whom we have to receive. They have received the goods. We sold them, or not a fake invoice to inflate our sales figures. So we need to be make sure. Confirmation of the bank balances in the bank balances, confirmation of the actual and the potential penalties from the legal advisors, and the confirmation of the inventory held by the third party may give the good evidence of the existence of balance. Receivables confirmation may not necessarily give reliable evidence of valuation. Customers may confirm receivable amounts, but ultimately unable to pay the future. So we need to be do all audit. So analytical procedures in audit is crucial as well. Analytical procedures are the fundamental to auditing process. Is use planning, audit planning, performing and review the stage of the audit. Defined IAS 20 International Audit Standard 520 analytical procedure. Evaluation of the financial information through the plausible relationship among both financial statement and non-financial data. Method and use. Traditionally, they incorporated comparison of current and the prior year's figures, current and the budget and the forecast figures, client industry averages, so that's all is the analytical procedures. Auditors can use it, exploit it. Okay, then we're looking at it. At the planning stage, the analytical procedures are used to helping gain understanding about the client performance over the last 12 months and identify the significant changes in the business, disposal and significant land, building, any addition in particular. A detailed knowledge could indicate the material misstatement reporting figures must be investigated during the final audit. Final audit, if we are here looking external audit. For example, when conducting analytical review, current audit client, you notice that the turnover had increased by 20% comparison to the last year, but the delivery costs have increased 50%. Normally, you expect the cost to rise in line with the changes of activity. So delivery costs are increased at much a higher rate. The reason we need to be look around, we need to be find the variance, we need to be look around. So Okay, guys, welcome. Sorry about we'll go through now. So we're looking, when you conducted the analytical review of the current audit, so you need to be look around. This is increased there. So normally you expect the cost is rise within line. So we need to be make sure we identify the reason why waiting times. There is an error in the sales or the delivery cost, the reasons of the variance we can investigate as a detail. Okay, next we're looking now, 4.2 is evaluate the impact of the legal and professional requirement on the performance of an audit. So audit performance, so management, we discuss, the management. What is the management? So first of all, management. Management is a process of designing an environment to achieve pre-selected objective. So of audit is the objective. So what is the objective of audit? What is the objective? You provide true and fair information. Okay. Audit also objective to detect the frauds. Yes, detect the errors. So we need to be look around errors and frauds we're supposed to be detect through audit. If your audit is not detecting the errors and the fraud, so what's the point? So there is no point to do audit. So we need to be make sure we deduct these through audit. So we need to be, so management is the responsible ensuring the entity, the responsible for the company with the number of things. So what we need to be look around, responsible to follow the legislations. Yes. So we have a legislation. Think about the Company Act 2006. If you're a company, you have to be follow the Company Act. They give NI contribution. Yes, to pay to HMRC taxes. We need to be. So all these, think about IAS, International Accounting Standard, IAS 1, International Accounting Standard 1. We need to follow International Standard of Audit. All these we have to follow. But if any legislation change, GDPR 2018, so you will see there due to they have an impact on your audit, so you have to look around the more evidence. So lot of standard being changed after Enron collapse, and World Telecom, the company telecommunication. So we have all these due to the lot of standard, and the auditor's work is increased because there is a problem, the trust. The maybe last, the Facebook on 25 million paid 4,000 tax, so the trust is in the auditor's work is low. So that's where you need to be. We have to be follow all the new legislation. We have to be follow our ethics because we are member of awarding bodies. Ethics, we discuss about PPCIO, popular people chat in offices, professional behavior. Always think about professional behavior. Think about professional competencies, and due care. It means you carry on doing CPD. Yes, and then you look around and integrity. Yes, always look around. Think about next, integrity, professional competencies, professional behavior, integrity, objectivity. Yes. So all these, you need to be clearly, we need to be follow these ethics when we do the audit. If any other things change, so we hear company laws, corporate governance, US Osborne, which is about the corporate governance, health and safety act, stock exchange regulation, financial reporting, different standards. So these impact on the audit work, and we have to be as a auditor need to be make sure we'll carry on following them. If we don't follow them, it mean it's impact our audit, our trust. So we have to be responsibility of the auditor. As our auditor is responsible to obtain reasonable assurance, reasonable, not absolute insurance, reasonable assurance that the financial statement whole are free from the material misstatement which caused by fraud or errors under international Standard of Audit 200. Non-compliance with law and regulation impact on the financial statement because the company in the breach of the law. So many needs to be provisions, the future legal cost and the fine. So worst case scenario could affect the ability of the company to be continues to be a going concern. So you have to give your opinion about the going concern. The business will carry on doing business as a normal at the same level of activity for at least 12 months. Maybe if there is a problem, can be your opinion should be. So in addition, auditors maybe need a report to identify the non-compliance laws, regulation like you have environmental legislation, you have a corporate governance legislation, you have an international accounting standard legislation, you have a tax legislation. So all an example of the later would be the client is a breach of money laundering legislation. So maybe as a company involved, so money laundering legislation need to be, bribery and fraud act need to be followed as well. So therefore the planning and audit of the financial auditor must take into account of applicable legal and regulatory framework. So specific auditor must obtain the sufficient. So we need to be look around the sufficient evidence. So what we need to do, guys, quick look around the sufficient evidence. Evidence need to be sufficient, yes. Okay, we need to be look around the laws and the legislation. We need to look around the disclosure, the information. Audit procedures, we need to be look around those is compliance with the law and any legislation. Non-compliance is identified, suspected, and the auditor must be respond appropriately. If you identify fraud, so what you have to be, where you have to report, to whom you have to write it, you have to tell the management about. So next we're looking audit procedures. So under International Standard of Audit 250, consideration of the laws and the regulation, audit financial statement require audit perform. Obtain general understanding about the client legal requirement, inspect the correspondence, relevant licensing authority, inquire from the management, remaining to the possible instant, non-obtain, so all we mentioned earlier as well. So here in the UK, International Standard of Auditing IASA, UK deal with the specific consideration auditors obtain sufficient appropriate audit evidence according with the International Standard of Auditing 330 revised in June 2016. If one ISA UK 5002 F2 and the other relevant international standard of auditing UK with respect to the certain aspect of inventory litigations and claims involve entity segment information about an audit financial statements, yes. So you have some the continuous operation in the business, some can be discontinued operation. So as a detail you have to make sure you should provide that information. Next we're looking the control of audit. So more reliable system of control need to be lower the risk of the material misstatement. Reliable system auditor need to be used. Auditor must understand the system, software, whatever if you don't understand it, maybe you can't do the audit because you don't know what sort of the report system can generate it, because you can look around the accuracy and efficiency of the system as well, how that will help to, like, you can look around the age debtors, you look around the age creditors. So test whether the control works. The more effective reliable system of the lower the audit risk, the greater the resilience of the audit can see to be placed upon the system. Okay guys, if you have any question you carry on asking. Auditors need to be certain the system, possible method. Examine the previous audit work, the paperwork, client own documentation of the system, interview the client staff, trace the transaction through the system, walk through test, observe procedures. Document the system, possible method, narrative note, look around the organization chart, who's responsible for what, and you can ask. Complete an internal control questionnaire, ICQ, flow chart, evaluate the system, use internal control, and evaluation questions. Okay, component of internal control systems. Component of internal control. We can look around the control environment. We can look around the risk assessment, information system, which is the accounting software, control activity, and monitoring. Always, is a crucial to be. So, auditors can look around internal control. So, like if we look the sales system, you look around the order received. Who's raising the order? Is it a different department? Then the order received from the purchase department, then the good dispatched, the invoice sent, the transaction recorded in the book, and the cash is received or make the payment. So we looking the, of course, sales system is received. Purchase system, you look around the order place, good receive, invoice receive, transaction. So these all the steps being followed in who is the, so look around the segregation of duties, so auditors can look around the segregation of duties, who is the responsible for what. So which is a very crucial to be end of the day, what is the purpose of audit? Audit me to check the accuracy in the book of account. In the lesson one, we discussed the word audit is derived from the Greek word data to checking the accuracy. So if we not find the accuracy, so we're not achieving the objective of the audit. So that's we need to be. So we need to be adopt the system. So other we need to be look around as a details, look around the sufficient appropriate audit evidence. So under ISA 500, audit evidence say the auditor should obtain the sufficient appropriate audit evidence to able to draw the reasonable conclusion whether the audit opinion are the sufficient, the necessity, the quantity must be obtained. Sufficiently is determined by the number of factors, the materiality of the item being examined, auditor knowledge and judgment. Then appropriate opinion can be. So auditor's evidence must be necessary for the quality, both the relevant and reliable. Relevant is the evidence is required that will be enable auditor to draw the conclusion of the financial statement assertion. Reliable auditors should consider the source and its reliability, written, external, and original reference and evidence. So we need to be look around. So when audit we plan as a detail, so you need to be make sure set the deadline, set the timetable, build the review process, look around materiality, look around, identify the problem, assess the risk, involve the right people, have a knowledge about efficiency and effectiveness, potential impact of fraud, how we can, a detailed job to detect the fraud. Yes, responsibility for the fraud and error. So management responsible is the prevention and detection. So what management is doing in these area, what control system they in place it, their payroll system, is there any fake workers in there to reduce the tax, maybe the details can check the evidence through the national insurance number. Yes, so look around and detect the fraud in the system. So a detail is the responsible detecting the misstatement where they affect the true and fair. So that's the watchdog, not a yes. So we need to be make sure the editors should follow all these legislation and give the true and fair information about the financial statement. If the financial statement not give you true and fair, so what's the point of do the audit? So there is a purpose of audit to provide the opinion that's unbiased, that's true, that's fair. So that's we're doing it. Of course, the legislation all impact the audit work. So next we're looking ISA 250 laws and regulations. So director responsibility to ensure the entities comply with the relevant legislation and regulation, to establish the effective arrangement for the preventing and detecting the non-compliance. Do we have that system? Is it the MIS, Management Information System, is bringing the information? GDPR change the legislation. Do we send the letters, update our clients, about the legislation? We are obtaining their information. We internationally, a couple of you International Financial Reporting Standard 16 about leases recently being changed. So we need to think about the leases being changed, what treatment we are doing after this, the standard. We are following this new standard or not? A detailed responsibility to obtain appropriate audit evidence about the compliance, relevant laws and the regulation, conclude the risk of the non-compliance with the law. If they don't do it, what risk can be, what fine can be. It can be closures of the company if don't follow the health and safety legislation. Think about health and safety legislation. Think about the child labor. Yes. Think about the equal pay. Yes. Equality and diversity in our organization. Think about, auditors can give the opinion, about these things as well. Okay, quality control. So quality in the firm leadership. So what is the leadership engagement program to be make the people engage? What is the ethics there? Human resource. What is their recruitment and selection procedures? Acceptance and the continuous. Yes, monitoring. Do we have a continuous monitoring system in place? How often we do reports? Reporting. Do we have a management accounts pre-prepared? Management accounts. So management accounts is the internal, yes, and it's preparing the planning for controlling, yes, for budgeting. That's why for forecasting. So that's why the management account. So do we are playing you in a management account? Do we have an internal audit in place? Internal audit. Internal audit assists external auditors. So all these, we have a large corporate governance we need to be look around. So earlier, as we mentioned, the analytical procedure analyze the relationship between the item of the data and relevant information. Analytical procedures include the comparison of this year's financial statement with other years. Look around the budget, industry averages, variance. Okay, then we need to risk assessment procedure. So we have assessed, we said is a red, amber, green. We're using the REC approach for the risk management. Do we have a risk management register maintained? We accident, safety, health. How often we do fire drills and how often do we check? All this is auditors look around all these. Not just the financial side and all. The operating organization is following all the legislation. The substantive procedures, analytical procedure, maybe use the substantive procedure or the suitable, the data reliable, relevant, available. So all this you have to ask the questions. So we discuss about what is our external audit. We look around different areas. External auditors can different legislation auditor need to be followed, and by law is a crucial to be followed. These, if auditors give the appropriate opinion, auditors should plan the work. Auditor detect the fraud, and last lesson we discuss about inherent deduction risk and control. So he get job to be minimize these, and minimize the separate. To further enhance your understanding, guys, please make sure before this you read this article, which further enhance your. I copied the link for you. Is laws and regulation about audit and assurance and respective responsibility of management and auditors. Make sure direct and indirect laws and legislation how affect on audit. The reporting identify the suspected of the non-compliance, money laundering, and all these procedures is following tipping off and the conclusion. So all this should be fully aware of as the audit students. So that's all today lesson. So today lesson we cover our LO4 learning outcome 4. If anybody any question, please feel free drop me email at anjum@ukversity.co.uk, and I hope so I'll speak to you all during our next lesson. Thanks for listening and attending, and thank you. Bye bye.